The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday. My pleasure to be here, 11 o'clock till noon Eastern Time. And today being January the 9th, Wednesday, I did the last hour. I sat in for Steve is still recovering. Oh, didn't sound all that healthy today. So Steve, don't push it. I know that you're always anxious to get right back behind the microphone, but it's really more important for all of us that you're just healthy. You're right here and giving us your intrepid views of the market and technicals that you've studied over the years, etc. So get well. And Tom is out, so was not, I sat in for both of them, so it was a pleasure doing the show. Got a couple of leftover calls. Got a call right now. In fact, I'll go right to it because Jack's been patiently waiting. And Jack from Deerfield Beach, Florida. We got a Deerfield right up here in Massachusetts, but he is 80 degrees, sunny Florida. So, Jack, let's go straight to you, and then I'll do the market overview, etc., because you've been waiting patiently, and you wanted to look at dry ships. DRYS is the symbol, and excuse me. And in fact, it's part of the shippers that just came alive. I mean, we're talking about a stock, dry ships, that was once at $131.34, having gone from May of 2006 to $8.50, and a little bit of a run-up, just a straight-up move like a rocket ship. That's what I've decided. I've spent a lot of time thinking about it. Crash denotes... Now, rocket ship doesn't have the same broad, generic sense of... It doesn't imbue... Crash is awful, right? But rocket ship, it's the best thing I've come up with. The opposite of crash is rocket ship so far. I don't know what else to, enlightenment? I don't know what to call it. So we're calling it rocket ship, and this had a rocket ship move straight up in one leg. It never made from October of 2006 on a monthly chart. It went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 months parabolically high. It looks like a rocket ship, but then it looks like the pattern I call the Eiffel Tower. It goes straight up and straight down. It comes back down. And where does it go to? It goes to a low of $2.72. And the most recent, that was back in March of 2009. And the most recent low is, I think, what did I see? 175? I think it was 175 in October of 2011. So at $2.19, it really isn't very far from the low. But most importantly, 146 just on the 16th of November. Now, this is really important because in the weekly chart, this is leg B. But all it's doing is trying to get back into that incredible resistance zone that takes it to 274. But on a daily basis, I've got this as peak C, and it has a target of 229, which is the 200-period exponential moving average, which it only touched briefly. It broke it and then broke down at 274 on the 19th of September. So this is what I'm looking. Do you have a position at all, or you're looking to get in?
I have a position, and I'm looking to add.
Okay. If your position is under $1.98, that's going to be very different to if you have a position at around about 210. So is it under 198 or closer to 210?
It's about 202.
Okay, excellent. 202 is fine. I'll tell you why. Because if it starts, there's a candle that I call the long-legged doji, and that's the candle that it made on the 7th of January. The high was 226. It opens at 220. It goes down to 205, but then it closes nicely at 218. What that says to me is that even if this goes to leg D, which it should, above 226, it's going to come back and it's going to test the candle. That's between $2.20 and $2.18. If it goes down and it takes out the low of 205, that was the low of 2 days ago, that was, I think, was that Monday? Yeah, the low of Monday. Then it says, be a little careful. It could still touch 198, but then it should come back and touch the body of the candle again. So that's like a magnet. The further it gets away from the magnet, the less powerful the magnet. So now let's do one of two things. You're in at about 202. Are you looking either to add, to subtract, or just the position that you have? You want to know what you should do?
I'd really like to add.
Okay, yeah, this is what I'm thinking. Normally, I would say if it broke above 226, like I did with the previous caller when we were looking at CLNE, that's clear, whatever it is. I've forgotten already what it was called, Clear Harbor. If I would say add 1 penny above 226, but that makes leg D, and the 200-period moving average of 229 is another magnet. And I suspect, this is my scenario, I believe that this has started a move up, a far more serious move than it has done before, because it's making a pattern that I call the dreaded H, a very successful one where it powers past the previous high, and that was the high of 1.85 on the 17th of December. And now you should have at least 7 to 9 sessions of upward move before it breaks 198 to 192 support. That's just the way I'm looking at it. If that's the case, I'm going to recommend that you try your best to see if you have the patience at 212, between 212 and 210. If it just dips there and it holds and it looks like it keeps trying to push away back up from that level, I would nibble on another position. I keep the 202 as kind of a core. And what I would do is this trading position, the moment, if it's able to cross and go to 231 to 233, I would tighten the stop on the little trading position and just let it run and see where it goes. And I'll tell you why I'm looking at it in that way. Because there's a candle, the high of 244 on the 11th, on the 6th of November, to the next day's candle with a low of 225. That area there looks to me, just on a purely visual basis, based on the technicals as they stand now with the stochastic at 90% and very strong, it looks to me like that's an area that's going to give the greatest resistance. If in the next 2 weeks, and it's really important, if the shippers are coming alive, they're almost like the VIX index. They're saying, hey, there's economic recovery out there. I think I might have heard, I'm almost sure I heard Tom in the car when I was listening to him yesterday talking about the rates. And I meant to check it out because I remember mentioning to Tom on my interview one afternoon way back when the dry shippers were screaming high. And I said, Tom, I just saw a South African rate. It was the highest rate they offered to pay. I think it was 157. It was an outlier in that it was way above the previous highs, and that marked the exact high. I must double check. I'm sure I'll find it somewhere. It was way above anything else. Well, if the shippers are coming alive, that's really important because it's saying, hey, you know what? You've got this whole thing of weekly, monthly, yearly rates, and maybe they're going to start switching from what would we call it as a when you go to a restaurant and you order piecemeal rather than the full meal. I'm just trying to think of the term, and they're going to go from piecemeal to getting contracts. That's going to be really important. And if we look at NAT, which is Nordic American Tankers, and I know I've heard this guy being interviewed all the way. I wish I had the chart because I've got that interview from with Kramer twice already, all the way down. The owner of the company of Nordic American Tankers was saying, we have never failed to pay a dividend. It was unbelievable. I think it was 40 years or 50. I don't know how many years. It's just an unbelievable number of years. We've never failed to pay a dividend and even increase the dividend. We've got the cash. And it's saying to me that something's going on because if NAT, which is Nordic American Tankers, starts to move with this more speculative one, which is dry ships, and if NAT is able to, it's at 919, if it's able to pierce 976 decisively, I think we might have a turn, and I think that's a good economic sign. So I like the fact that you had the courage to just dive in, pick it up at 202, and there's another way of doing it, because I know that you watch the market closely, correct?
Yes.
So if you do that, you might even want to just nibble right here at 219, knowing that this one could give you, on a percentage basis, going back to 210, that's 8 cents. That's a big percentage. It's really not much in points. So don't overdo it. If you want to just nibble it, I would try to have the patience to get it a little lower down, preferably underneath the candle of yesterday of 214 as an add-on. But the other way I would do it is if it broke above 226, that's going to leg D. It's starting to bump into the resistance at 229. I suspect, unless there's a powerful spike, another big spike in all these shippers, and they have another big move just to break out, I suspect there's a little consolidation that's going on here. So am I fussing about 8 cents to 10 cents? Only because it's a $2 stock, that's all. Normally I would say to you, you've got a great position. You could add a trading position, even do it right now, knowing that it could pull back a little bit. The percentage wouldn't be so big, but because it's a very low price stock, all you need is 20 cents and you've got yourself, 10%. So, I'm just looking at it in that kind of context. So I love your entry. I'm going to be watching it together with you. I like the fact that the shippers all came off together. It wasn't an isolated event as if one guy said, hey, I'm on my way, and everybody else said, oh, really? And then they follow. They all did it simultaneously. Something's going on. I think it's very positive. It's the early stage in terms of assessing on a daily basis. The weekly is improving. It's in leg B. It's above the $2 and 194 is somewhere around 194, 196 is a 9-period moving average support in the weekly chart. This is just a horrible move. It's really in a rectangle formation. It needs to decisively break into 248, 250 area, and then it's on its way. So nice entry. If you want to just nibble now, maybe that's even a better way to do it, because I know you watch the market very closely. You can put your own stop on it, but realize that it could pull back 7 to 10 cents, and that wouldn't harm it at all. It would harm it if it broke underneath 198 in the next 2 days. That'll say, whoops, that's the leg A, single leg A up failure type pattern. So I hope that helps you, but I think your entrance is a great entrance to give you a little bit of comfort. I don't want you to put in another position that makes you nervous. If you feel very comfortable, then the way to go about it is to add a little trading position and try to keep your core at 202. And 202, on that one, I would have a stop of about 189, just because the weekly is attempting to move higher, but I would not like it to actually close below 198. So those are parameters I'm looking for. A big move like this in this particular group, straight off the bat like that in 3 days, you would expect a little consolidation, but I think at 202 you're in at a very nice level. So thank you so much for calling, Jack, and let's watch this. We'll watch this together. Thank you very much. So Basil Chapman, Tiger Technicians Hour. We'll go through all the numbers in a moment. Dow's up 73, S&P's up 5, Comp is up 15, and gold is down 4.5. I'll be right back at 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Okay, let's just do this because I've got a bunch of emails. I made a mistake in my opening call in the Traders Corner, and I repeated it yesterday and today. For some reason, I don't know what got into me. The stock. This is number 4. For those of you who get my opening call, number 4. We are long at 56.19, and 58.19 is the stop. Right, that's not no, that wasn't it. That's right. This is today. No, I corrected that. No, I didn't write that. I thought someone said that I wrote something incorrect. All right, I'll figure it out. All right, I'll figure that one out. Sorry, I thought I'd update, but okay, this is what we're looking at. Here we go. So the Dow, I've got the chart of T up right now. This is telephone. I was asked about that. Before I forget, I'm just going to do it. It made a peak D, and I'll come back to it. So I'm going to write it down here because the count was important, and that is a peak D, and now it's pulling back quite sharply. Here we go. All right, I'm back. INDU. This is the Dow daily. The Dow is at parallel wave count G/A. I'm almost sure that it's A and it's going to make a B. And the B would be 1 penny above the 13,447.10 high of the 4th. It does that. There's no other wave count. I've got to call it B. And that extends leg B up in the weekly chart. That implies that the rally that started in the monthly is improving enough to consider that a new high above 13,000 was at 3661, 13,661.87 in October, 1 penny above that, I have to call it leg C up. If it's going to be a failure in January, it's going to take out the low of last month of 12,883. It's probably, if it takes that out, it's probably going to go right into the wick of the candle of November. I have a positive bias. In fact, one of our shorts got taken out. We made a small profit on it. It was a great move, but I lowered the buy stop from where we entered. So we now only have two shorts, one short trying to get a second short, and we have mostly longs. So this is what we're looking at. The Dow is so far positive. The stochastic at 89%. If it holds in this mid to high 80s, goes to 90%, that is really positive. I like what I'm seeing here, and I can even draw a little pattern right there. That's what's called the ChapmanWave falling axe. That's just a declining axe, cone formation. If it powerfully breaks above that, if it goes to 13,429, the 13,447 high of the fourth is going to be vulnerable to be taken out. So far, this is very nice action. So that's the Dow. Let me just go. The question I had is, do I use a displaced moving average? No. I use a exponential moving average. So then rather than the DMA or the simple moving average, I use the exponential moving average. I've just found in my own work, look how beautifully, it's a great question. Everybody has, and this is just my own preference. Whatever people use, I say just be consistent in what you use, and then you'll find out how well it works and how well it doesn't work. That's all. Or how well it doesn't work, how it doesn't work. And I found, look at the way, in my work, how it hugs the body of the candles and the wicks. Look at that, of the Dow. It walks the 9-period exponential moving average. Then that's like a gondola. It is a resistance. It can't move above that 9-period moving average from the breakdown on the 21st of December. Then it breaks above it. That snapped through on the 2nd of January, and look how it's holding. Yesterday it went right to the 9-period moving average. So yeah, the answer is I use an exponential moving average. And in this case, it's a 9 exponential moving average. I use others. In fact, in background here, I'll highlight them. You can see other moving averages. I keep them in background. They're not as important until I need them. I use a 14-period exponential. I use a 9-period simple. In this case, it's a simple, not an exponential. So that's very important to me. Now, I love the action of the Dow today. It was so important yesterday. I thought it was pretty good action. Not great, but pretty darn good action, having bounced off the 9 EMA. It needed, as I said in my opening call to my subscribers, it needed to break out above yesterday's high of 13,377.42. But look at the S&P. Now, this is also quite fascinating to me, because the S&P is in F/A, and if it takes out the high of 1467.94, the high of the fourth, even by 1 penny, I have to call that leg B up, and the stochastic's at 91%. I cannot fight that. That is outstanding action. So that's there. They got the Qs. I'm going to go to the Q for the moment. The 3 Qs. This is good. They are struggling, but the stochastic's at 81%. It's good. The GLD is really important right now, as far as I'm concerned. It cannot close above the 9-period exponential moving average. That's resistance. So to me, that's a negative for gold. I'll be right back at 877-9.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and what are we looking at here? We're looking at a situation where the 3 bears, let's just have a look at them. Look, the TLT, that's bonds, is stalling. And I don't think it's going to break 119.69, or if it does, it's going to give it back quite quickly. So the pattern in the weekly chart says dreaded H, went to a lower low, didn't close below the left side low of 118.05. It closed at 118.40 last week. So this is a very important week. I suspect that it's going to be kind of an inside week. Actually, no, I'm going to rephrase that. If it does close above 119.80, it could go into the gap down, the 119.90 high of the second and the 120.91 low of the 31st. But I think it's going to make another arch formation. And in fact, what I'm looking at here is that there's a really good chance that we've made a peak D in the monthly with that alternate count that I had. I'll go into it more in the next couple of days. I don't really want to take time right now. It's just not my focus at this point, although my focus might be to buy the TBT at some point. But I'm not sure. I think it's the Fed is going to prop this up. So it doesn't have to rally very much. 128.83 is the 200-period exponential moving average resistance in the daily. So I just don't see much there. Now, the dollar looks like it wants to get to 80.88 to start leg D. But at the same time, it's a rally that at this particular point is only at 69% in the stochastic. The MACD is very good. So something's wrong with this picture. That has to improve with the stochastic going to the 80% to sustain it. Then it might put a little pressure on the general market. So that's the dollar, the VIX index, which right now is at VIX index. We went through this earlier. Came off the bottom. It hit 13.22, a new multi-year low. Could be a decade low. That 13.30. It's stuck in this low area. 15.16 will be the resistance to take out to start some kind of a small sell-off in the market. If it gets back into the 70s, that'll be a deeper sell-off. But so far, it's buying pressure. So I wanted to go through that, and I also want you to just say that the high-grade copper. That'll be the final one. Then I have to go through a bunch of questions that I had. It's trying to hold 3.66. That's the 9-period moving average. I just think copper, I see these things stuck in a trading range, and copper is one of them. Unless copper is going to break into 380s, if it does that, that's really powerful. So I needed to go through those. Now, question number one is, I had, what is the wave count on TWX? Let me just check if that was the question. Yeah, the way TWX is Time Warner. I've got it as leg C up, very positive, 94% in the monthly chart, 9-period moving average of 44.26. TWX is trading right now 49.92, down 23 cents. It's way above the 200-period moving average in the monthly. And that was important. The weekly is in leg D, stochastics at 83%. The stochastics starting to make lower lows. So I'm watching this because it's very close to some kind of a consolidation. That's all I'm going to say. Not a huge decline. Now the daily chart is very important because the daily chart is in leg D. And it says to me, based on the technicals, that at 86%, that's good, and the MACD is good. So the parameters are near term. There's tremendous support between 48.55. There's a gap down to 47.88. So I would say right in the middle, 48.20 is probably pretty good support on TWX, unless it takes 3 to 5 sessions without making a new recovery high. Then all of a sudden I'm looking at the gap high of 47.88 as a potential target. However, 49.13 is the 9-period moving average that it's using as a comfort factor support. And if it does push in the next 2-3 days it's at 49.91. If it pushes about 50.66, 50.78, that's going to be very important because it raises the base of support. So those are the questions I had. Then APKT, packet, what is it? Acme packet. Now this is the exact example. Walks the 9-period moving average. It's made a peak D with a silent doji on the 7th of January. What's the silent doji? That's the candle that I teach in my Master Trader series and my webinars. Very important candle. It's in leg E up in the weekly after getting pounded, having gone. It was the screaming stock, the rocket ship stock, going into April of 2011 to round number 72 open, goes to 84.50 high, has a low of 67. Those round numbers are killers if you can identify them. I haven't printed it here. I think I got it on the black background charts. This is the Acme Packet Inc. Eiffel Tower A, capital A formation. Comes all the way back down. At some point, if it takes out 13.26, man, that's in real trouble. But it's trying to make some kind of support here. So it's had a very nice rally from 13.26, the low of the 27th of July, the week of that last year, to the most recent high of 24.25. Hey, I would say that that's almost a double. And still far away is 28.89, the 200-period exponential moving average. That'll only come into force if, in fact, 24.25, 24.50. That's not the candle. It's the candle that broke down there. 26.50. If this even gets close to 26.50 in the next 2 weeks, I say, great. Now my target is 28.89. I suspect that it's at a huge move, and now it's going to have a trading range between 24.50 on the upside and 21.23. If it breaks 21.23 in the downside, watch out, because it could take out the low of 20.84, the low of the 30th. So I think most of the work's done. It's kind of in a consolidation right now, still with an upward bias, but it's getting a little long in the tooth. The letters that we're talking about are the ones I just gave. The monthly is new in leg, gray leg B up. Weekly is in leg E, possibly peak E if it doesn't make a new high this week. And the day is made a peak D short term. No, it's just a sell signal. I haven't got a sell mode yet. I haven't got the MACD below the fast-moving average, below the slow-moving average. Next thing is Beam. Just a question about the wave count in the monthly chart. Let's go to that. Now, we are long Beam, so this is a position that we have. This is American Spirits Company. It's trading at 60.41, down 28 cents. It had a low of 17.67 in March of 2009 after making a 90.80 top back in August of 2007, and then it ran up to 65.48 peak E. So this is gray round number A, short-term top from the 42.30 new buy signal, which hasn't yet gone to a buy mode. And the resistance to take out is 64. If it doesn't have to even close there, but if it gets to 64.01, that's leg B, gray B, because it's underneath the last peak E, but it's a positive. And at that point, the stochastic has to be above 77% to 80%, and then I'd say that's good. If it gets above 80%, that's very good. So that's the monthly chart. That was the question, and it's gray peak B, leg B, peak B, if there's no new recovery high this week in the weekly chart, the stochastic strong at 83%. So I hope that helps. The next question was, yes, the question I had was, if I'm leaning towards the bullish side, why didn't I go long one of the indexes? Two reasons. I was using stocks, and I really have a tough time if I have more than 6 or 7 stocks, either long or short together, just handling them, because they're either 3 very good ones on the upside or maybe 3 on the downside. I like to handle what I've got, so I didn't want to use it up by going into an ETF when they're up in the 140s. So a big deal, make 3 points. I'd rather put that money to work on the stock side. But yes, I will consider the DDM or the SPY, the 200% long the SPY. I'm not sure about the Qs just yet. Or I might go to the IWM, which has acted very well. So I'm assessing. And that will be my bias towards the long side at this particular point. But the percentage is really what counts. And I'd much rather get a lower price stock, that has the same upside potential, because it's a chart pattern that repeats over and over again. So let's do this. Okay, and I've got then Siri and telephone I need to talk about, but we've got a caller on the line. We've got Ben from Tallahassee, Florida. Hi, Ben. How are you?
Excellent, Basil. How you doing?
Very well, thank you.
Great. I'll try to make this real quick. So for the WFM,
Whole Foods Market, yes.
Yeah. In the weekly, looks like it just made leg D down. Can you confirm that? And is it possible we could get a like you like to say rocket ship up sometime next week if it could make a peak D on the bottom?
No, remember, on the way down we call them troughs. So it's, I know what you mean.
Right.
enough people have made that mistake that I'm used to it. But they are troughs on the way down and peaks on the way up. That's number one. Number two is, I've only got, let me just do this again. The bar that makes the low and the high can't be counted. So the high of the week of the 5th of October at 99.86 slumped down to, had a low of 94.37. That can't be counted. Only the very next bar, because the next bar has a lower high. So that made peak F in the Chapman wave. So you can only start counting from the week of the 12th. That starts leg A, continues 93.46. Oh, I didn't see that because it was being covered. So you've got legs, a trough C, right? Because you counted that first one. Am I correct? I believe so. Whoops. Oh, we dropped. Oh, I'm sorry. You were running out of time. Right. I'm sure you're listening on Tiger TV. So this is what I'm going to say. Let me just expand this. Folks, it's a great question. In the Chapman wave, it's really important. There is only one time where the low bar, where the same bar that makes a high and a low can be counted as a trough or a peak. And that is in the Chapman wave instant restart. That's after peak D. no other time, because every other time you've got to wait. Now, look what happened here. What was being discussed is Ben asked about Whole Foods trading on the week of the 5th of October at 99.86. And there's a sharp pullback. And what happens is so that's the pullback, 94.37 is the low. The next week, 93.46 makes a lower low and a lower high. So that confirms that it's a peak. But right on the bar, it hasn't made a peak yet, so you can't count the low. Only after that can you start your count. So that's leg A at 93.46. The next week has 93.66 higher, so that's a trough. No new high. So when it breaks below that 93.37 to 93.36, it starts leg B. Leg B goes to 90.76 the week of the 26th of October. And then you get 91.25, a higher low. So that becomes a peak, but no new high. So then it goes down to a lower low below that, and that's leg C. It's a floating letter. It goes to the next low until there's a trough. And at 85.70 the week of the 16th, it goes to 85.70. Following week, the low is 88.20. So that's a peak C. Now it's going sideways in a rectangle pattern. The only thing we had a trade on short the WFM yesterday, and we got it 3 cents off the high. And what I said was, so 3 cents off the high at 89.31. It went down to 86.85. That's a big move for a day. And then it started to come back. So I said today, let's make the stop. I think I said 89.01. Let me double check. 89.01. I'd update every single day. 89.01. But if it went to 85.69, which would be 1 penny below the 86.85 low, 85.69. Now, what I said is if it goes to 85.69, which is very important because it's the low there. 85.69 is below the November the 14th low, where the whole cup, the arch formation starts. At 88.85 was the high, and 85.70 was along the 14th. That low there started peak A minus, then A to B minus, to B, sorry. Then it goes to C minus because it took out the left side low of 87.42. And I'm expecting that this goes by about the 16th of January. There's a test of 85.70. I'm hoping that we have a chance to reshort this again. The way I'm looking at it, it's making this rectangle formation. I'm not sure it's back on the way up now. I think it's going to be retesting the lows in that 85.70 level of the week of the 16th of November will be retested. So keep in mind, in my opening call, I don't know yet, but I think we will going in for a reshort if there isn't a better one. There's another one we've got, which I'm trying to get. It isn't getting to our level to start a short position. That's the one that I think might offer even better opportunity. We'll see. So the answer is to the question I had before, why didn't I go long something like the DDM, the 200% long the Dow? I just wanted to use my buying power. I think of this as a overall portfolio in someone's entire portfolio. Maybe they own a home, maybe they have funds, maybe they have bonds, maybe they have, and this is part of their performance portfolio. That's really what I think of it as. So I might be wrong, but that's just the way I treat it. So I treat our positions as a portfolio. So I'll be back. Basil Chapman, 877-927-6648. Dow's up 85. S&P's up 640. Slightly weaker than the Dow, but still pretty good. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Got the last section, and we've got Freeman online. Freeman in Dallas. Hi, Freeman. How are you doing?
Hey, Basil, how's it going? Hey, Basil, I know we don't have a lot of time. Hey, Basil, the VIX has a slow stochastic of less than 2%. Do you agree with me that the VIX is at a short-term low and the indices are at a short-term, we've reached a short-term high for the indices? Do you agree with that?
I would agree with you if I wasn't looking at the percentages in the daily charts of the Dow and the S&P and the IWM as being so strong in the daily charts. Those stochastics are really strong. Even look at the USD JPY, the US dollar Japanese yen. It made a peak E, but the stochastic was so strong in the 90s that now it's dropped to 86%. It had peak E, and it's walking the 9-period moving average. It refuses to turn around. I suspect it's making some kind of a little short-term top. So those indexes, those tools that I use, I consider them to be really important. Look at the IWM. Right now, the IWM has made a peak D. It's attempting to make a peak E above the 87.44 level. The stochastic's just steady, like a rocket, 91%, and the MACD is expanding. And even now, you've got this constant selling pressure in the market, and yet they haven't, so far today, haven't been able to drag it down even though I can see that there's someone's out there selling or something's doing the selling. So what I would say to you is the volatility index certainly at this level has a chance to rally, but the same way as you get a flat 90% stochastic, that is what I love because it maintains the buying pressure, so the stochastic can remain between 1% and 4 or 5% and not go anywhere for about 1 to 3 weeks. It could do that, and that would be buying pressure. My suspicion, and it's just a suspicion so far, is that there will be just a gradual move up in the volatility index, but what it'll do is it'll just be a little bit of a handicap to the market as it tries to go higher. But you're looking at the right thing, but unless there's a V-shaped bottom and the stochastic goes from 1.84% to 15 or 19, preferably 20%, if it does that, this market is coming back down sharply. But at this particular point, I have to say to you that the stochastic is saying to me with a very wide MACD, no, there's nothing there. The weekly chart is at 54% and still has room to come down. So the concept is good. The application isn't applicable now because it's flattening out at 1.84. It hasn't made a V-shaped recovery. You know what I mean, right?
Yes, sir. Thanks a lot, Basil. I appreciate that.
Thank you very much for calling. So I had a quick question in the den about when I look at FXY. So the FXY, I haven't got it notated here, but it's plunged. It's gone. This is the weekly chart. It's just made a beautiful, just an incredible, like I talk about the USD JPY, which is really what it's based on. This is the USD, the dollar, Japanese yen currency pair. That powerful move to the upside in the weekly chart, where there's a cup formation and a breakout in the pattern I call left side, right side, price time match with the inside wedge. I never got my CD out to show what I'm talking about. That inside wedge breakout and left side, right side, price time match with a ChapmanWave cup and ladle breakout invariably goes to D. How powerful it is what happens when after D when it comes back. Well, it broke above the 200-period moving average. That's at 85.80. It's at 87.90 right now. So if there's a new recovery high above 88.4, that's saying that there's still internal strength, and then what we're going to have is a rectangle at the top for a consolidation. I hope that helps. Thank you so much for being here, everybody. This is Basil Chapman. My service is called The Opening Call. Go to the front page of TFNN. Check it out. You can get 2 weeks for free. Just sign up and you'll be able to get it. I explain all these patterns as we move along in the ChapmanWave. Thanks for being here. Stay tuned for Larry Pesavento.